and they're not they're the distractor of this industry right now.
Yeah, I believe that to be true for sure. Now, I was checking an article out here. It said 2021 was the year of institutional crypto adoption. And let me read some of that to the listeners. Despite the volatility the crypto market experienced in 2021, the year turned out to be a net positive for almost every aspect of the crypto industry. The year saw several major developments that accelerated the adoption and success of the broader crypto market, and others that served as headwinds that slowed down the market's growth and forced its participants to take their losses and rebound. However, none of these events seem to have slowed down the rate of institutional adoption. According to Kraken Intelligence 2021 crypto report, last year will unequivocally go down as the biggest year for cryptocurrencies in terms of adoptions from institutions. Not only did the financial institutions and corporations get the exposure to the asset class, but capital inflows from new and existing crypto-focused investment vehicles took off, and that's what seems to be going in the market. Have you seen a lot of that?
Well, yeah, it leads into what we were talking about. And they have a finite amount of coins, and all this institutional interest is percolating now, wanting more and more of this coin, specifically Bitcoin, because it's the largest, got the biggest network. And as they're going to go after this coin, they're going to realize they're going to have to pay more for it because there's only 21 million of them. I heard this the other day. There's 21 million Bitcoin, 19 of them mine, 2 million left. There's 56 million millionaires. A millionaire out there can't get but one half of a Bitcoin. I'll guarantee you they want more than one half of a Bitcoin. They may want 10 Bitcoins, or they may want 100 Bitcoins. But the more they want, what's the variable? The price has to go higher. And that's why any of these dips in the market, I'm enjoying it because I get to buy my Bitcoin cheaper.
Right, of course.
And of course, El Salvador was the biggest buyer in the market here. They made it, the whole country took on Bitcoin as a currency, and they were the biggest buyer on this dip. They added their biggest position right at the 30 level of this recent downturn.
I was wondering the other day, the early adopters of Bitcoin, the guys that were out there buying, Bitcoin was at 1 cent at one time.
Yeah, sure.
Way back in 2008, I guess it would be.
That's not that long ago.
No, it's not that long ago. And I was wondering, for $100, you'd get 1,000 shares.
Oh, yeah.
So I wonder how many of those Bitcoin investors are still have their 1,000 Bitcoins now.
Oh, I would bet when you hear Bitcoin millionaire or Bitcoin billionaire, it's an early adopter that had a gazillion coins at pennies that just never sold them. He held on to them, and then his assets just double, triple, whatever to get him up to the millionaires that you're talking about in the Bitcoin market.
Yeah, I've read some articles that talk about a lot of those guys just bought it as a kind of a lark. They didn't really think it would go anywhere, but they figured, what's $100? I'll buy it, get 1,000 shares, and if it goes somewhere, I'll make some money. And so now they're millionaires or billionaires even, and a lot of them are looking for their private key. They didn't really pay attention, and so they put their private key somewhere, and they can't find it. So from what I'm understanding, there's like $100 million of Bitcoin that is just sitting there because the person that bought it lost their key and can't get to it.
That's an interesting dilemma. It's not like a bank account where you're just opening an account and then get a statement. This does give you a key, a security key, that if you can't produce that key or somebody else steals it from you and produces that key, they can actually own that Bitcoin.
Yes.
But I hadn't heard that, where a lot of these first adopters probably forgot they did it and consequently didn't put much weight in the key and don't know where it is. And you can't call Bitcoin and say, "What's my key?"
Uh-huh.
That's your own private entry. That's your security key, and you got to keep it safe.
Yeah. When you get and that's with any cryptocurrency, it's not just Bitcoin.
Right.
You want to keep those private and public keys in a locked vault.
Yeah. Well, you do.
Basically, and and make sure that I guess you have a backup and just make sure that nobody else gets a hold of it.
I have a
But
friend right now that switched computers and phones, but he's kept his old computer because his Bitcoin key is in that computer. And he swears it's in there. He just hasn't found it again. So he's got some tied up Bitcoin himself.
Yeah, yeah, and those were the early adopters that they just didn't think that it was going to be that big a deal, and they just didn't take care of the key, and now a lot of them are sorry. I've seen some articles and comments online. If you can find a way, if you're a programmer and you can help me find my Bitcoin, I'll share it with you.
Yeah, if you can help me find my key,
Yeah, my key, right?
Then I'll be happy to cut you in on it. But it's an interesting problem specifically to these coins, because none of the other asset classes have those keys associated. So it's a little bit of a learning curve to understand that key concept, but you'll understand it if you put some money in this.
Yeah. Oh yeah. Yeah. Keep those keys handy. Now, I guess back to the institutional adoption. Is it increasing at all?
Well, yeah, I just that's what I just you can't gauge. But when my interest perked up on this, I looked at it back in 2008. I was too smart for that. I just, oh, are you kidding me? This could be a ruse. I'm not playing that game. And of course, when El Salvador picked it up as a currency, dropped the dollar, oddly enough, and picked it up as a currency, it got my interest again. And then, of course, about the same time, I ran into you, and you were active in this, and we've gotten together now and done some investing together. And it's interesting. How do you stop it? I really don't think. Maybe in the United States, you won't go full born into this, but in El Salvador, you will. Costa Rica, you will, because it's a better way to do it. I mean, I read about a group in Costa Rica that used to have these credit card machines to do their business. Took a couple days to clear it. There were all sorts of fees associated. Somebody showed one of them the Bitcoin Lightning Network, to where they could just get laptops and use the Lightning Network to pay for the coffee. And in other words,
Okay.
go over there and go to that ATM, buy some Bitcoin, and then you'll pay me that Bitcoin through this Lightning Network for the coffee. Well, Costa Rica now, they're taking computers and doing Bitcoin transactions. Nobody's using their credit card machines because it's a 2-day transaction. It's private. It's quicker. They get paid, and that's the whole thing. Once you start something like this, how do you end it? You can't end it. It's a better deal than the current situation. So it may not start big in the United States because of the banking industry, but in those smaller countries that can use that Lightning Network to make this a day-to-day activity, they're not going to stop that.
That's interesting. I'm kind of unfamiliar with the Lightning Network.
The Lightning
What is
Network
that?
is like a bill pay process on your bank account.
Okay.
It just overlays the Bitcoin blockchain and allows for smaller transactions. And that's exactly what's going to make it. That's how they do 13.1 trillion transactions.
Okay.
Those aren't the big all the time transactions that trade 3 Bitcoin for a car or buy a house with Bitcoin. This is the day to day pay for your coffee and
Your donut.
your donut
Yeah.
and use your card that accesses your Bitcoin account and pay the vendor with Bitcoins.
Okay. Is Lightning Network expensive?
No, it's a service that you pay for to. I'm sure in Costa Rica they know a lot about the Lightning Network, but you and I don't use it because we're not transacting business on a day to day in products where we would be using a Bitcoin Lightning Network.
That's interesting.
But if I were you, I'd get up on that because that's really going to be the growth of it.
Yeah, yeah, it sounds like it. The Bitcoin Lightning Network. Now, I know that an article here another article that says people have many feelings about Bitcoin, and it's the cryptocurrency that started it all. Of course, we all know that. The progenitor of 1,000 memes, 1,000 more questions, multiple dubious salary decisions, and an entire industry built around its promise of financial revolution. It's also a point of contention. Now, some countries have embraced Bitcoin wholeheartedly, with El Salvador, as you mentioned, saying the cryptocurrency will give more citizens access to banking. Others have outright banned it from their borders, citing the risk of criminal activity. Wherever you stand on Bitcoin, though, one fact is undeniable. Bitcoin is extremely energy hungry. Countries like Finland or Denmark, and that's concerning in a world that's already on track to blow past its climate goals, thanks in large part to fossil fuel emissions from energy consumption. And that problem is partly why Intel, one of the largest chip makers in the world by revenue, recently unveiled Bonanza Mine, its first computing chip specially designed for mining Bitcoin in an energy-efficient way. So I hadn't heard of that one yet either. Have you?
No, Matt, and think about it. There's only 2 coins left.
Yeah, 2 million.
22 million coins left, so 21 million. There's 19 million. So they're going to lose that argument here pretty soon when they can't mine any more of it.
Yeah.
That's an article that I've used. The banks have used to distract from this. It's criminally involved. It uses a lot of energy. You'll normally hear that from the banking institute because they don't want you taking money out of the bank and putting it in your crypto wallet.
That's a pretty good evaluation there. I'll bet that one's true. Yeah.
Oh yeah, that is true.
You got to be careful about what you're reading there from the banks. Now, with the value of all the cryptocurrencies, what are the other considerations? Will prices keep going up on cryptocurrencies?
Well, it's supply and demand. I mean, that's really what we did. I was a stockbroker for 30 years, and our whole strategy was finding thinly traded stocks that somebody wanted for a reason or so. In other words, if the buying comes in and there's not enough shares to go around, the price goes up. Mm-hmm. And that's exactly what I like about Bitcoin. It's the same strategy. It's a thinly traded cryptocurrency, unlike, let's say, the one that we both own called Pi, a new cryptocurrency that you mine on your phone. That's how we got involved, matter of fact. They just announced they're going to have 100 billion coins. Brand new coin, 100 billion coins. All that means is you can't value it very high because it's times 100 billion equal their market cap. So think about that. I really have not liked what Pi has done is they're forming this coin to bring out into their monetization, so we'll have some value on what we've been mining. They're really using too many coins in their formation. Now, they do have 30 million people in the program, so it could split up to an equal amount. And really, Pi is interesting to me for that reason. Ethereum came out with 1 million people, and it's trading at almost 3,000 right now. Mm-hmm. But when you look at a Pi network, like Elon Musk is a participant in Pi, and he says, if I'm going to sell my solar wares, do I want to sell it to a million network or 33 million network? And that's the way he looks at it. I don't know of another one where you can use your phone to mine it and you're involved with a network of 33 million people. So yeah, I think it's going to keep going up because they don't have enough of them. And as people get more, and for me, the reason I use these cryptocurrencies, I'm doing my taxes. So I looked at the interest earnings that I got off my money market account at the bank. There's a pretty good balance there, and I got $193. Mm-hmm. Now, wait a minute. What's going on here? I looked at that, and I was disgusted because I know what the balances are. On that balance, they're paying me for a whole year $193.
Yeah.
Well, heck with that. I'm going to go put some of that in the crypto market and we'll get to this, the stable coins. Because I don't want a return of 0.005, I want a return of 5.0 on the money that I have sitting around. And that's why these banks, they can say what they want about this vehicle, but they don't have a lot to argue about. They're paying 0.05 on money markets.
Mm-hmm.
They got to get off of that. Well, maybe they will when these interest rates go back up, but that's got its own problems.
Right. They'll go back up slowly, though.
Well,
I'm sure.
Yeah, I'm sure.
The interest rates will be high, but they'll still be paying 0.05.
Well, that's because we're 33 trillion in debt in this
Well,
country.
that's true.
And the Federal Reserve is asking. They know what the problem is. You go to 6% on that debt, that could put this country under. That's another reason I don't feel comfortable with having it all in all my assets backed by the U.S. dollar. That's a debtor dollar, not a credit dollar, a debtor dollar.
Yes.
And if that thing were to get a 6% amount charged against that debt, who knows how long it could hang around.
So I've never heard those terms, debtor dollar and credit dollar.
Well, for the longest time, we were a credit nation.
Yeah.
Now we're a debt nation.
Mm-hmm.
We have deficit spending more. We add to it each year systematically. Well, systemically, I should say. I'm not happy about it. And the problem is when you're in business and you have cash sitting around for liquidity purposes, that's losing value because of the deflationary nature of a lot of debt. Now, it doesn't cost a lot at zero like it's been,
Mm-hmm.
but if they start increasing this to 50 basis points, 75 basis points to control this, that's going to have a cost on that 33 trillion that they didn't have before. And then where are they going to get it from? Continue to roll it up into more debt? Hey, I'll take the 21 million coins and put my assets in that and let that back my assets.
So let's see. I guess recently they've raised it twice. The first one was 0.25%, and the second one was 0.5%. So in the last couple of months, we've gone up 0.75%. Then,
right?
And how much do you think that's costing the economy?
Well, I mean, it's just money.
It's just money.
Yeah,
it's 33 trillion, but I mean, like out of that 33 trillion, I guess it's got to be some big number, like 33 million anyway, a day or something.
Well, that's my point. Is when it's sitting at zero, you don't have to add anything to the debt because there's no expense to have that debt. But if you put a 5 or a 6% cost on that, mm-hmm. How much does that? Well, we know at 7.2%, it'll double in 10 years.
Okay. Yeah.
So you see what I'm getting at? If you don't pay it, and you just let it accrue, it's going to not be 33. It'll be 66 trillion in debt. So that's why I really think that's in the 2008 financial crisis where the markets were really bad. That's where Bitcoin started as mm-hmm. an alternative to a weak asset class. And that got going, and now it's 10 years old, and it's huge. 13.1 trillion in transactions yearly, and I don't know. You can continue like Warren Buffett says. I wouldn't pay you $25 for all the Bitcoin that's out there.
Yeah, he's not in favor of it all at all.
And but let me put it this way: his life expectancy is a lot less than the people using it for their companies on Bitcoin.
Yeah.
I mean, it just you can look at you can look away from this as I did in 2008. But you're not going to stop this. I mean,
no.
It's an asset class, and it should have its rights, and the banks are going to have to get over it and be more competitive than worry about where their assets their fee base is going.
I know that more banks are coming off the strict banking paradigm that they've got, and like J.P. Morgan has their own crypto coin.
Yeah.
And right now they're just using it for their own customers. But I would expect that that's going to get such great reviews from their customers that they'll start using it to gain more business.
Well,
Okay.
yeah, and instead of turning your nose up on it and saying, if you use it, we're not going to let you use this money, then they're going to lose their asset business.
Mm-hmm.
Because, guys like me, I won't tolerate that. I'll go take the money and put it in a bank that is friendly to cryptos.
Yeah, yeah, that's more and more. There's more and more banks out there that are doing that, and I assume that eventually, at some point, all banks are going to be forced to deal with it. So I guess they probably need someone to give them a plan on how to switch over, how to handle both currencies.
Or they need a new generation of managers that will adopt Bitcoin.
Mm-hmm.
These old fogies up there, they're going to have to retire, and then the new guys will come in and do some Bitcoin transactions.
Yeah, okay. Okay, audience, a quick reminder. You're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM with your city, Monday to Friday, 11 a.m. to 4 p.m. We're at break time right now, so take a quick 5 minutes to listen to our advertisers, and then we'll be right back to talk about stablecoins.
Commercial Energy Consultants is a 10-year-old company focusing on middle to large commercial accounts. CEC offers these companies services by lowering their electric and natural gas rates. They don't charge for this service, and they've got over 9,500 happy clients with over 1 billion kilowatt therms under contract. What makes them different is their reverse auction. CEC offers a way to have available suppliers in 17 states bid openly for energy business. Why, their mission is clear. Bring their clients the low bid for their energy consumption. In fact, because of their competitive auctions, energy consumers would be well advised to consult with CEC first. Why pay more for the exact same power? For more information, contact Mike Grimes, CEO of Commercial Energy Consultants at 1-877-212-1400. That's 877-212-1400.
Hey, listeners, saying thanks to your customers is nice and polite, but expressing your gratitude in memorable and ongoing ways can boost your business. At Promo Experts LLC, we exceed our customers' expectations. For over 20 years, our product knowledge and experience has helped them with their marketing initiatives and trade show graphics. We are happy to put that experience to work for you. Quality products, great customer service, and prices are our #1 priority. We work with you to find unique, creative, and new ideas that fit your image and expectations, helping you build strong relationships with your customers. When you select Promo Experts as your marketing partner, we help you to see more than the big picture. For more information about this exciting opportunity, contact Diane Carson, President, at 636-458-5241. That's 636-458-5241. Let Promo Experts help you to move your business brand beyond the bland.
Attention! Here are 5 things that you can do to avoid coronavirus scams based on the Federal Trade Commission guidelines. Number 1, do not respond to text messages, emails, or calls about checks from the government. The government never sends emails requiring that you do anything. Number 2, ignore online offers for vaccinations and home test kits. Number 3, hang up on robocalls. Scammers are using illegal robocalls to pitch everything from low-priced health insurance to work-at-home schemes. Number 4, watch for emails claiming to be from the CDC or the WHO. Use sites like coronavirus.gov or usa.gov/coronavirus to get the latest information, and don't click on links from sources that you don't know. Number 5, do your homework when it comes to donations. Never donate in cash, by gift card, or by wiring money. For more information to help you be prepared, contact Tony Zifilopoulos. He's a 25-year IT professional with the last 6 years specializing in cybersecurity. Tony is a certified information specialist auditor, and he will review your cybersecurity. Tony can be reached at 314-504-3974. That's 314-504-3974. And email TonyZ@fixvirus.com. His website is www.fixvirus.com.
Have you always wanted to write your own book but don't know where to start? Publishing Concepts, a publishing company located right here in St. Louis, offers everything from consulting, book printing, copyrights, ISBNs and barcodes, print book layout, ebook and iBook layout, graphic design, cover design, ghostwriting, typing and editing, distribution, marketing, and more for an affordable price. Visit publishingconceptsllc.com or just Google Publishing Concepts to get started today, or call 314-781-8880. That's 314-781-8880. Publishing Concepts. We help you sell more books.
Hi, listeners. Welcome back. Just a reminder, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, and nationwide on Zeno FM with your city, Monday to Friday at 11 a.m. and 4 p.m. And I want to talk a little bit about the cryptocurrencies and how we can understand how stable coins work. Because of the frequent volatility of bitcoins, many large investors are not sure about the prospect of their investments. In such cases, they don't prefer to put their valuable capitals at the whims of the large Bitcoin ecosystem. Many investors find the sudden fall in Bitcoin prices quite overwhelming, so they look for a safer alternative. And that's what stable coins are all about. And Mike is here to kind of help us with that. Mike, what is the difference between Bitcoin and stable coins?
Well, the difference is Bitcoin is volatile. It's a volatile cryptocurrency, while stable coins are not. Bitcoin isn't pegged to any asset, and so it fluctuates in value following the condition of the market. This makes Bitcoin a good crypto asset for speculation. However, some people and businesses don't want to deal with Bitcoin due to its volatility, which led up to the introductions of stablecoins as a solution. So stablecoins are designed to be stable. They are pegged to either fiat currency, commodity, or cryptocurrency. Examples are USD, USDC, True USD, and so on. We also have Jax coin, which isn't pegged to another asset. Unlike the aforementioned stablecoins, Jax coin is decentralized and runs on the proof of work protocol. The stable value of these coins makes them ideal for payments compared to Bitcoin, which is more volatile.
Okay. So when they say that it's decentralized, like the Jax coin is decentralized and runs on a proof of work protocol, that's kind of like what Bitcoin does, right? They have their proof of work protocol.
Yeah, this is how they work. There's three different ways. One's called a custodial stable coin. They're backed by one-to-one by a single company. For every U.S. dollar stable coin that enters into the crypto market, a financial organization holds the equivalent in dollars. This is the most common type of stable coin. Stable coins include Tether, US Coin, and Binance USD. There's Algorithmic.
Okay.
Uses a range of blockchain-based mechanisms to maintain their fixed price. Recent regulation fears these types of stablecoins have grown in popularity as they tend to be more structurally decentralized. Terra USD is an example of this type of stablecoin. And the last type is a collateralized stablecoin, use of smart contracts to lock up other crypto assets as collateral for loans. For these loans, automated programs generate new stable coins accordingly and maintain price stability to the underlying asset. DAI is an example of a collateralized stable coin.
So they use smart contracts to generate more stable coins?
No, smart contracts are a different concept altogether. They're just automatically, automatic programs in the DeFi space that do transactions that have proven to be but they automate them. That would be a smart contract.
Okay, that's interesting. So, I guess the next question was, what are stable coins used for? But you kind of have almost answered that.
Well, I'll give you an example that I'm currently involved with. I have some Bitcoin in my IRA and my personal account. So I saw this dip, and of course I use technical analysis to trade it. And I just think it's very cheap in here. I think it's beat down because the Nasdaq's down, a lot of different reasons. But there's no reason that it should stay down here. So I was moving assets in from my bank to add to my Bitcoin position, but I don't want to put all my assets in Bitcoin. It's just the volatility is a little too tough. So the other part of the assets moving in are going to go to a stable coin. And I think I'll use that Terra stable coin because it's easy to get in the crypto.com account. And then, of course, once I have that in there, that's the asset that you move to the Metamask wallet and do the DeFi transactions using the stable coin as the collateral in the Metamask wallet.
Okay. That's MetaMask, isn't it?
Metamask, right?
Yeah, with all these different terms, it's confusing.
Difficult.
I know that.
Right.
Now, MetaMask seems to be building pretty good, and I guess that's a decentralized finance wallet made especially for that.
Well, it's a DeFi wallet that is probably one of the most experienced in the transactions that you can get in the DeFi space, and I wouldn't go too far from it. There's other ones that are coming out, but they're not proven as much as MetaMask is.
Yeah, there's lots of just other exchanges. There's other coins. There's other stable coins, and I guess they're coming out so fast. It's just adding to the confusion out there.
Well, yes and no, but I think if you're going to find the newest Bitcoin, it's going to be in that DeFi space because everything's coming out so fast that you're going to find out about one that's forming, that continues to form and matures nicely, and that's going to be the next cryptocurrency.
Next big cryptocurrency.
Right, and
Yeah.
you're able to get into it with a small amount of money instead of a lot of money.
Right. You want
Bitcoin at a penny instead of $40,000.
Yes.
Yeah.
You want to get in there, be an early adopter, and get in there inexpensively, get a lot of shares.
Yeah, and that's what that DeFi space shows me is you're getting access to those you wouldn't otherwise see.
Mm-hmm. Okay. Now, with all these new stable coins coming out, there must be risks associated with all of this. How are the risks associated with stable coins being dealt with?
To address the prudential risks of payment stablecoins, the President's Working Group on Financial Markets, along with the Federal Deposit Insurance Corp and the Office of the Comptroller of Currency, together the agencies, recommended the Congress act promptly to enact legislation to ensure that payment stablecoins and payment stablecoin arrangements are subject to federal prudential
Framework.
But they're going to jump on it. I mean, the whole thing about stable coins is you're unlocking the $4 trillion that are in the bank.
Mm-hmm.
The bank, the person out there that's very conservative is not going to move money to a crypto wallet and buy Bitcoin because of the volatility, but they'll say, I'm not getting any return on this money at the bank. I'm going to put it over here and get a better return. And that's what a stable coin will do, is get a better return that you can get in the bank, and it's going to be pegged at $1. But on Friday, this big decline that we saw in the Nasdaq and the Bitcoins caused one of them to lose its peg. In other words, it's pegged at $1 to stay, and it got as low as, I think, 65 cents. And what happened is what was backing that peg was Bitcoin. And instead of buying Bitcoin, being one of the forces that's buying Bitcoin to back that $1 peg stablecoin, they were forced into selling Bitcoin to create cash to have that go from 65 back up to $1. And that's the risk of these. If you don't get into one that's got substantial assets or substantial backing, then you're running the risk of it failing and have to sell its underlying assets to make it good, and then that's going to cause further volatility in the market.
So you have to be sure about what is backing that stable coin then.
Yeah, you do, and a lot of them, as we said, are backed by the U.S. dollar.
Yes.
And that's an interesting concept. If you're leaving the banks because you're not comfortable with the 33 trillion in debt this country is, with interest increases coming, you're leaving the bank to go to another asset class that doesn't have those problems, and you find out that asset class is backed by the same asset that you're leaving in the bank.
Yeah.
So you have to find a stable coin that isn't backed by U.S. dollars.
How many of those are out there?
There's a couple. You'll have to just do your own research and find them, but that's something we could help somebody with. If they wanted to call in, we'll do the research and find you some stable coins that aren't, if you're concerned about the U.S. dollar enough to leave them, you don't want to go into the environment and have them backing your asset class.
Mm-hmm.
And we could do that for anybody that wants to call in.
Yeah, that's a great idea, Mike. You can call my office at 314-781-7612 and just leave a message. I'm usually here at the station, but call my office, leave a message. I'll get back to you. Or you can call Mike. He's at 1-800-212-1400, and you can talk to him or leave a message there with his receptionist, and we'll get back to you. That sounds like an area that we should probably look at too, with the stable coin and backing, what's backing them and that kind of thing. Now, my next question is where do stable coins generally come from?
Well, stable coins are generally created or minted in an exchange for a fiat currency that an issuer receives from a user or third party. To maintain a stable value relative to the fiat currency, many stablecoins offer a promise or expectation that the coin can be redeemed at par upon request. These stablecoins are often advertised as being supported or backed by a variety of reserve assets. 5 issuers' reserve assets is not consistent across stablecoin arrangements, such as to either its content or frequency or its release. Based on information available, stablecoins differ in the riskiness of their relative assets, with some stablecoin arrangements reportedly holding virtually all reserve assets and others reportedly holding riskier reserve assets, including commercial paper, corporate and municipal bonds. My whole point on this is be careful with the stablecoin that you own and be comfortable with the assets that are backing it. I don't think it makes sense to be in a dollar-backed stablecoin if you're not happy with the action of the U.S. dollar.
That makes sense.
Yeah, and I think that's an interesting point, though, Matt, because some of the yield farmers that I follow are using the U.S.-backed stablecoin because they like the action of it. They like the performance, and it's because the dollar is strong, not because it's got 33 trillion in debt, but it's strong relative to the other currencies that are out there.
That's still stronger than everything else?
It's still stronger than everything else.
Okay.
So they're getting a good result with liquidity and returns off the U.S.-backed stablecoins. I just happen to be concerned with the debt in this country, so I'm not going to put my assets in a stablecoin that is backed by the asset class that I'm trying to get out of.
Yeah, I think that's a good idea too. If you're trying to get away from the dollar, why go to something that's backed by the dollar?
Yeah.
But what are there any stable coins that are like backed by the euro or
Yeah,
the ruble? which may not be a good idea right now.
I think I mentioned earlier there are some that are backed by municipal bonds, asset classes. There are some that are backed by other currencies, but it takes a little research. A lot of it's got to do with the wallet that you have, because in my Crypto.com wallet, they pretty much make the Terra stablecoin available to everybody. Not Tether, but Terra.
Mm-hmm.
And no, Terra's the one. That's the one that just had that. Terra was the one that had the Luna coin behind it that lost its peg on Friday.
Okay.
And the other one is Tether, and that's the one I can buy in the Crypto.com account. Remember, we don't want to get too in the weeds here, but if you're going to play this game of cryptocurrencies, you have to maintain a wallet. And the one I use is Crypto.com. I think you use the same, or
Yeah.
Coinbase. There's two that are big out there. I like the Crypto.com, but in that, they'll make the stable coins available to you. It'd be nice to say I can go into any one I want, but it has to be available on that platform that you're in.
Yes, yes. I've been recently working on my Crypto.com account, and they seem to have lower fees than everybody else.
Yeah,
So
and that's another
I like
thing
that.
You have to be concerned about is, and that's in that DeFi space again, you can do certain transactions, but they're very expensive to do. And that's what happens. People search out some other areas that are pennies on the dollar versus dollars on the dollar.
Mm-hmm.
And it's just human nature to find the cheapest way to transact the business.
Well, definitely, yeah. Any money you're paying for fees is coming out of your pocket.
There you
But
go.
I think a lot of that is the Ethereum blockchain tends to have higher fees than anyone else, and I know that they had started with Ethereum 2, which is supposed to one of the reasons was supposed to drop those fees down a bit, but I'm not sure that I've heard that the fees did actually go down. Have you?
Well, one thing about Ethereum is they do about 90% of the DeFi transactions.
Mm-hmm.
So if you're going to work in DeFi, you better know about Ethereum. And what I've been told is if you're going to transfer money over to a DeFi wallet, which is that Metamask we've talked about, do it in an 80-20 structure, 80% stablecoin and 20% Ethereum, because the fees then are taken out of the Ethereum account, not the stablecoin. So it is, Ethereum's going to come into play here if you work DeFi. Most of the 90% of the transactions you'll see are on the Ethereum blockchain.
Yeah, for decentralized finance. Yeah, it is. So, how is the transfer and storage of a stable coin accomplished?
Well, to become a useful means of payment, a stablecoin must also be readily transferable with a reliable and accurate mechanism of transferring ownership. Stablecoin arrangements typically facilitate the transfer of the coins between or among the users of the stablecoin arrangement by having issues and other participants record transfers either on the book or the wallet provider or on a distributed ledger for transactions involving users of different wallets. In the sense, they can facilitate the transfer of value as a payment, as in payment systems. More specifically, the payment process underlies both distributed ledger and traditional payment systems and share similarities. I don't want to get too deep into the weeds here, but as you get into one of these transactions, you're going to find out the rules associated to it. And it's all based on the protocol that, the fine print, so to speak, that I think you're going to have to just try it, experience it, and see if you like it or not.
Try it, you'll like it.
And if you don't,
Yeah, if you don't.
make the switch to something that you do like.
Yeah.
Is my pro.
That would be a good idea. I'm just thinking here that maybe it would be advisable to print up or talk about a beginner's guide to all this decentralized finance and cryptocurrency, stable coins, all those types of things.
Yeah, and I really think that's the key is if you're a beginner in this market and you're listening to this show just to try to learn about it, you're not going to start with a DeFi wallet. It's a progression that you got to get into, but you may start with a Contemplate type free website that you go to and do some games to earn coins. And the theory there is it doesn't cost you anything. It's held on your phone or on your smartphone, and you just go to it once an hour and you play it, and then it accrues the coin that you want. Then you transfer that coin to your wallet and trade it for anything that you want. Now that's a good way to get involved with cryptocurrencies, but it's not easily deciphered either because there's a lot of them, and you can find all sorts of things to play with. But for instance, a couple that you'll play with won't pay you anything, and you'll notice it because you played it for a long time and you got nothing accruing. So you have to know which ones pay the best, and then get in there and be religious with it and play them, and then transfer them out and put them in what you want into your wallet, and then transfer them into anything you want.
Yeah, there's quite a few of them out there. Mike and I have got that list down to about 20 right now, and there's lots of them that we haven't got a chance to look at because they're coming out all the time, just like coins are. But we have links that we can send you to check out the cryptocurrency, which I think the free accounts are a good place to start for beginners because it gives you the feel of the market. You can generate a cryptocurrency and go in and read the white paper about that particular cryptocurrency so you can see what the developers are looking to do with it, where it gains its value, and that'll give you more ideas about how you can use that to generate more crypto. So if you want to get in touch with us, again, you can call me at 314-781-7612. And if I don't pick up, just leave me a message and I will get back to you. I'll give you a call back. You can call Mike at 1-800 877 212-1400, and he will talk to you if about it, and if he isn't there, leave him a message too and he'll call you back. So I guess we should move on here. We're kind of bogging down on that thing now.
One other thing before we move on.
Okay.
The second step, try these free sites to get your feet wet and accrue some coins, but then you're going to have a wallet. You're going to have a crypto wallet.
You'll need a wallet.
You can't put those accumulated coins in your bank account. They won't take them. So you're going to have a crypto wallet. We're recommending either Coinbase or Crypto.com. Crypto.com has a $25 bonus that you get to play with them. And like you said earlier, we found some lower fees in that one than we did in the Coinbase account. So those are the two steps you're looking for if you're new, is what free sites can we start accruing, and then what wallet can I start to where if I get enough free coins, I can transfer them into a wallet.
Crypto.com also pays some interest, don't they?
Yeah, I mean, there's a little, I haven't seen much interest paid, but there's something that you'll find out once you get into everything. All these wallets are different. Once you get into one, you'll start to learn about the details of that wallet.
Mm-hmm. Okay, listeners, if you're just now joining us, you're listening to Cryptocurrency Odyssey, airing live weekly on KWRH 92.9 FM on Fridays at 10 a.m. in St. Louis, Missouri, and nationwide on Zeno FM. Zeno FM and your city, just type in your city there, and you can pick it up Monday to Friday at 11 a.m. and 4 p.m., and, of course, you can call me at 314-781-7612. And you can also check in with Mike at 877-212-1400. Now, our discussion today is a beginning course for people that want to be educated in the world of cryptocurrency. But, however, we're running out of time, so I want to jump ahead to our tip of the day, and that will give you a little bit of information about strategy. What you need is a a strategy for crypto trading. It isn't easy to separate genuine cryptocurrency recommendations from the scams. There are a lot of sharks out there waiting to take your money, and reports of crypto scams surged in the first 9 months of 2021. So watch your money. Don't get involved in a scam, and listen to us next week. We're running out of time. It's the show is over. Come on back next week. Listen to us, and you have a great week.
And I'll just say Bitcoin to the moon.
There you go.